I think everybody can kind of feel with the inflation that's in the air these days. I was there in 1971. I lived through it and I was, in my late teens. So I didn't really understand that in July when I had a $20 bill, it had some level of backing of gold. And in September of that same 1971, it had just debt backing. And it was now in the control of the central banks. I was too young to really understand that at that time. But having lived through it, I know what it smells like and tastes like and feels like and looks like. And these are all repeatable patterns. 100% we're at the very end. How does it impact the normal population, the general public?
Lynette Zang stated, "I think you're seeing it right now in the inflation that's raging. For them to say it's transitory is garbage because it hasn't been transitory since 1913, and it's not transitory now. Too many things are happening. Wages, what are they going to do? Cut wages? I don't think so. All of the issues we're seeing with supply chains and globalization, keep in mind, in the 1980s, when I first became a stockbroker, all the talk was about globalization. I remember thinking to myself, I'm not so sure this is a good thing for the average person. Now, how does that impact markets? We've been taught that the only choices for investment are Wall Street product stocks, bonds, mutual funds, whatever. Here's the problem. You can only convert that wealth into US dollars. So if the dollar has no value and no one will accept it, then what do you have? 1,000,000,000 times zero is still zero. And that's the piece people miss. Baked into the very currency system is inflation, because they knew governments could tax you without having to go through legislation. I mean, if you knew you were going to get higher taxes, you might complain, right? They don't want you to complain, they want you to comply. Corporations want to be able to pay people less and less to work, other than those who are the chosen few. Inflation causes nominal confusion. In 1970, the average wage was about $9,500, and a family of 4 could live on one wage earner. Now, I'm not saying they were super wealthy, but they could get by. Today, the average wage is somewhere around $54,000 to $58,000, and on the surface, you might think, well, I'd much rather have $58,000 than $9,500. But it now takes 2 wage earners, and people are still living paycheck to paycheck at $100,000. Everyone making up to $150,000 even got stimulus checks. What does that tell you? Do you think they're being nice? No, it's because the currency is worth that much less. That's also what has enabled income and wealth inequality. The system that was put in place is designed so people wouldn't understand it.
You'll see that they actually admit to making things really complicated, because if they do that, then people don't question them. I don't understand finances, so, gosh, they must be so much smarter than me. When I read them, number one, I know that what they're doing is they're giving a signal to those that have been deemed too big to fail to shift how they're positioned, but it is always the little guy, the institutional investors that are investing your money that have been picking up the slack so that you don't notice in the bond market how broken it is and how fragile it is, so that when it does implode, well, those big guys have already gotten out. They're already putting their money in hard assets, gold, real estate, etc. And then the little guy is left holding the bag. I do really feel strongly that you should always do what the smartest guys on any given topic are doing for themselves. So they're selling their stocks and they're buying hard assets. It's so interesting. I came across an article, I think it was in the Financial Times, on the wealthy Chinese investors have stopped putting their money into real estate, which of course we know in China, there's problems around real estate. But instead, they've been buying hard assets like Rolex watches and gold and things like that. When you're doing things like bullion, so maybe new eagles, things like that, you're looking at the spot market. Do you really think that Wall Street spot market that can create as much gold that does not exist as they want to and control for virtually no money millions and billions and trillions of dollars in physical, do you think that really reflects its true fundamental value? No. So I do just a basic, easy calculation. Okay, what's the fundamental value? What's the true value of an ounce of gold for its most important function? And in my opinion, the most important function is to hold your wealth, your purchasing power even. Does many other things, but that's the most important function. So if I know for an absolute fact that the true value of an ounce of gold is $50,000, then quite honestly, I haven't really spent 50,000 on a coin, but I'm just saying, I do know that the minimum fundamental value of an ounce of gold is 50 grand. So if I spend anything less than that, and it's on even a high collectible, my bet is hedged.
Lynette Zang stated, people who buy cryptocurrencies and those who buy gold have a similar mindset. They're unhappy with what they're seeing and want a decentralized, private place to hold wealth. I get that. But I don't think you're very private with Bitcoin, because what do you do when you open an account? Don't you have to give them your name, address, social security number? Bitcoin may be decentralized, but it still goes through computer systems. When we had gold and silver in physical form, it was heavy and inconvenient to carry around, so you put it in a bank, and they'd give you a gold or silver certificate, which you could convert at any bank if you didn't like what the government was doing. So, you had decentralized money that was truly private, and it controlled the government. If you converted your certificates and took the gold out of the bank, it restricted how much the government could spend. They didn't like that, so they transitioned us to convenient paper money certificates, which they said could be converted into gold or silver whenever you wanted. And look how much lighter and more convenient they were. Then, in the 1950s, they started issuing credit cards, which had no collateral. You didn't need to have any. It was a consumer credit card designed to get us used to this new system. We've been moving in this direction for a long time. But at least if you hold a dollar bill in your wallet, yes, it's a debt instrument, a Federal Reserve note, but it doesn't pay or charge interest. So, you still have that privacy, even though you can't protect your purchasing power, only your principal.